Hello, welcome to the Wednesday, March 8th, 2023 pre-market observation stream. Let's take a look real quick at TLT. Um, Yesterday, the Fed had his testimonial in front of Congress, and that's going to go again today. It was not a surprise for us, at least for me, that he was more hawkish than he was last month because the economic data has been stronger. The Fed has been very fearful of inflation returning. So do not be surprised if the next Fed hike is going to be 50 basis point. Now, the bond market, of course, reacted in a way that there is an inversion of the rate as far as short-term rate is higher than long-term rate. That has been going on, but the gap is going to be wider from what happened yesterday. Why is that? Could be many reasons. Um, the bond market is factoring in that a hard landing is more likely, and the Fed will have to cut rate sooner than later. That could be one reason. The other reason could be just people misbehaving or FOMO into buying something. I don't understand it. We have been here before. The last time TLT jumped to the 107, 108 level and stay there for a week or a month, it was nonsense. I've been saying that for quite some time. The Fed is not done even raising rate yet. If the Fed pause, then it makes sense for TLT to be in this area up here. But for now, uh, I'm not buying into TLT. Where would I buy? 101 and below for sure, right? At least 100. Ideally, if TLT come down to 101 and below, what I would do then is sell puts in a 98 and below. That's what I did last week. Right now, I have 3 outstanding puts expiring this Friday at 98, 97.5, and 97. I also wrote some cover calls on my position yesterday on the pop. I wrote cover calls at 103, 103.5. But for me, that's it for TLT. No need to add to my position other than sell more naked puts should there is a reversal today. The market reaction yesterday was not a huge surprise. The one area that has shown a lot of weakness is, of course, healthcare, pharma, right? I have position in Eli Lilly. I sold some more puts yesterday uh, at the 30. It was put spread. I sold 307.5, 297.5 put spread. I have a 310 put spread that I sold last Friday as well. So we'll see. To me, this could be the area where I think should Eli Lilly break the low of last week, I think we can see potentially 305 is the next area. It is at an area of support, okay? If you go back 1 year, you can see this area right here is where the previous peak was. It's definitely below the channel. It's outside the channel. So the bull move is over. Okay, so the question is now, can it stabilize and get back in the channel down the road? Possibly, but the bull trend is over for Eli Lilly. I drew in this channel yesterday. Potentially, this could be a down channel inside an up channel, right? So right now, we are near the bottom of this potential channel, down channel, and it could be 305-ish. Uh, Keep in mind, sometimes resistance and support is a range, not just one number, okay? So sure, I draw a line like this, all the trend line, channel, all that stuff, but it's usually a range. So if you look back at 1 year, you can see that in this area between here and here is a range where the stock has find resistance and support multiple times. So ultimately, can we get all the way down to 274, 275? That would be the complete retracement of this big bull move, right? So worst case scenario, we can go 20% lower. Okay, it can happen. Crazy thing can happen. Even the big boy, Amgen. I was watching Amgen for a long time. I traded Amgen a little bit last year, and then of course I missed this big move. And then look at this, a complete reversal, complete 100% reversal of the move. So if you want exposure in Amgen, this is it. Okay, you can sell puts at 220 if you want. That means that it would have to test the new 52-week low. But if you want to play it safe, that's where the play is for Amgen. Write a put at 220, right? That's the place. But wow, what a move! For those that don't remember, Amgen announced a big purchase sometime right here. I think December, right here on this big ugly candle. They announced buying another pharma for billions and billions, and since then it has been nothing but pain. They also issue a ton of bonds in order to fund the purchase. So all this, wow. Even the hot stock of last year, right? Biogen is at key area now. See, look, it's at reference support right here, right now. If this fail, then it will probably test the low. I put an alert here so that I know if it come down near the low point after the big gap up. Because if this fail, if where it is right now failed, then it will test this, and then you have the 2-day moving average coming right up. So where would I look to do something on Biogen? Maybe sell a put at 240. Okay, that would be the highest I would do to do a put spread, like do a 240, 220 put spread, something like that, if there's enough juice. The other hot biotech, of course, is Gilead, right? For those that got it and wrote up this, hopefully you're wise enough to set some kind of stop or get out when you see this kind of movement, right? It's over. Especially here on this reversal, the third time trying to get back. No, get out. If you want to draw a channel, you can. But right now it's at no man's land. Okay, I wouldn't touch it. Not right here. Not right now. How about the other farmer, FV? FV is barely hanging on to the channel, and support is like a big confluence of moving average right here. You get the 50, you get the 100, you get the 20. If you have FV, I would say use the 20 MA as your stop, because after that you can get stopped out there and buy back here. For me, I have no position in FV right now. I'm waiting for this to break and then perhaps sell put spread at the gap fill, like 145. Okay, that's what I would do. I'd rather do that than chase it up here. The risk reward, not right now. Let's take a look at banks. All right, Bank America fell out of the channel. Look, it done it before. See, there was 2 week span here that it did, more than 2 weeks, almost 3 weeks right here, and then it did it for another 2 weeks right here. So this is not alarming because it has done this before. In fact, if you want to draw another channel, you can, but it is in the zone of support. Okay, the zone. Okay, you go back 3 years. Show you why I draw that. See, go back 3 years. This was a big breakout right here. Right here. Big breakout. Check back. Support. Bounce. Bounce. Okay, so it's back in this area. I have a small position I have been adding, but certainly it's still small. where would I go much bigger? Down here at the bottom range of the zone. Okay, so anywhere in the low 30s, 30.4, 30.5, I would go much bigger, double up, triple up kind of thing. But for now, I will keep adding in this zone. It's still the most attractive financial in my opinion, because look at Goldman Sachs. Goldman Sachs, nah, not low enough. Okay, not low enough. Can Goldman Sachs get down to the 200 MA again? Yes, it can. If it does, then I will sell puts down here. That's a better play for me. JPM, same thing. Okay. Now, risk reward tell me that if I go long here using the 50 MA as a stop, yeah, I can do that. But what's the upside? Another $5, right? What's the downside? Who knows? Okay, so right now I'd rather not be in JPM. How about fintech? PayPal, grinding sideways, right? If it keep going sideways for the next 2 weeks, it will likely meet the 100 MA, and then maybe there's going to be a push to get over that, right? You get in 2 weeks, it'll be a whole lot of confluences between all three moving average. Sure, the 200 is going to be the area where if there's any kind of push up, I would look to sell up there wherever the 200 MA is. So if there is some kind of reversal of the market, some kind of bullish move to push the market up, that would be the spot to exit PayPal, at least trim. Let's take a look at JetBlue. I like JetBlue, but it had been a frustrating ownership because of the purchase, and they want to continue to fight it. And the longer they fight, the longer they're gonna hold the stock down. Okay, if you look at JetBlue compared to all the other airlines, it has performed the worst because of this buyout nonsense. If they didn't have this buyout, JetBlue would have enjoyed the run like the rest. For me, it's a no ads. I have a position. I have not add in a while. I was waiting to see if this can break to add and the merger news to be finalized, but of course not. For now, it's going to go sideways until for another 2 or 3 weeks until it get to the point of this point right here become it's touching the upper channel. So what we'll see. We'll see if there's a breakout. Okay, so let's look at say Delta. Much better, right? UAL. Look at that. Much better. And of course, JetBlue is that ugly for the past year because of that nonsense buyout that really make me very angry with that stock, because I was very bullish over a year ago, and then it has been hampered by the merger news, which they should have abandoned a year ago. All right, let's take a look at some FANG. Google. I have good size position in Google. No need to add to it. Right now, it's kind of like in the middle of everything. Where would I sell Google? If Google get into the 102 range, you bet I would trim a whole lot up here. Okay, in fact, I would write cover calls in the 101, 102 area on my position. I did. Amazon, kind of okay, right? If you long here, it's okay. I don't see a need to be long. I don't have anything in Amazon right now. I would sell put down here in the 90 and below. If there is a dump in Amazon that it get down to the 92, 91 area, I'd be selling 88 puts. But for me, no position right now and no need to be in it. Meta, doing okay, right? I was looking to buy back what I trimmed up here, but that did not happen. There's a reversal. Part of it too is that whole news on TikTok, right? This Snap and Meta has both have bounced the last few days because of the news that there's a pressure to ban TikTok altogether. So if TikTok is banned, naturally advertising money from TikTok is going to flow into Meta and Snap. That's why you have this strength right here. So we'll see. I have a position. I don't need to add to it. I will add down here. Okay, I will look to add down there or sell put at the 150 range using the 50 MA as my protection. But to me, if there is juice in 150 puts, that's not a bad play. They might not be. That's too far below. But that's what I would do with Meta, Microsoft. I saw a put last week that expired. For now, if there's a dump anywhere near or below 250, then I will sell put again. I will sell 240, 220 put spread. But right now, the risk reward is not there to be in it or to do anything with Microsoft right now. CRM. I trim on this big gap up. I trim, I think, one third of my position, between 1/3 and 1/4. Not quite 1/3, but more than 1/4 of my position there. That was a smart thing to do. I should have put a stop at the low of day on that day. I did not. What I would do now though is if I see green, I might put a stop on half of my remaining position on the low of yesterday. So that if this fail, because I forgot to use my stop last week, put it there, I don't want to give back too much more. Okay, this is a lot to give back between 168 and 183. All right, so yeah, I would probably trim half my position should CLM continue to slide. Industrial bounce hard, but if you have industrial, keep in mind if the Fed keep raising rate, there's going to be weakness in industrial, transport, many things. So be careful. To me, it is a no-go here. I was thinking about selling puts on Honeywell down here on this move. I had ordered in, but it didn't trigger and I missed the move. That's okay. I think Honeywell, GE, all of those are gonna suffer. Let's take a look at the sector I like, DGX, diagnostic. I was looking to get in. I've been trying to sell puts on here. It's tough. DGX and LabCorp are two diagnostics stock that I like, but it's hard to play options on those because the options are monthly options only and they are very thinly traded. But I will keep trying to sell 135 puts on any dump down to the 136 level. I will try to sell put at the 133 and below. Okay, the highest I would chance is 135, but I do think it will likely test 131, 32. So just be patient. We were patiently waiting for it to slide from here. It was long, take 3 months, but it did. Okay, so maybe in another month, should the market decline 2 to 5%, then DGX will be right here, right in the 132 area, and I will buy. LabCorp is the other one. Big move yesterday. Break. Okay, so now it's below all of the moving average. So I like LabCorp more. To me, I'm looking to sell 220 put, 220, 220 put, 220 and 200 put spread, something like that. Lot of support down here. Okay, so be more patient. I'm not ready to pull the trigger yet on the option order, but further weakness and the 220, 200 put spread or 220, 210, either way, If there is enough juice in that, it's a go. Let's take a look at big box, Walmart. It's at this spot here that if you want to add to Walmart, I wouldn't say no, right? It's at the key support area that it bounced. See, it bounced here, it bounced here. It's back there. It's right here, right now, right? If this fail, 135, 136, okay? For me, the better play is trying to sell puts down here at 135. This way you have some protection should the market retrace. If the market retrace and Walmart get back 2 or 3%, you'll be down there in a heartbeat. So why chase it here, right? Sell the puts down there. Target, which I like a little bit more for a while, but not anymore. See, I like Target more on this move, which I did, and I got out. I sold put way below before earning, and that was a win. But for now, I would not sell put above 158. You know, if Target go down with the market, 155. That's the area that I think is worth selling puts down there. 155. Costco. Wow, what a move, right? That was ugly. Wow, but this is a nice reversal here when you had this nice wick down. Wow, I did sell Costco put spread last week on this ugly move. I sold 2 put spread using 460, 455. I sold one that's like 455, 435, and then one more that's like 450, 430. They both will be winning trades. But for now, it's a no touch. Okay, this is an ugly. This is nice reversal, but this is also ugly right here. This ugly wick up, touch the 200 and the 20 MA, and the reversal below the fib. It's ugly. It's pretty as this move 3 days ago. Yesterday move was nothing short of ugly. Okay, it's a no touch for me right now. But if they come back down to the 470 level, then I will sell more 460-ish put and put spread. That easy. Let's take a look at healthcare as far as health insurance. UNH, it's at that spot. If you want to sell put and put spread, yeah. Where? 460, 440, plenty of protection, okay? Key area of support is right here in the 465 area. And it's the 52-week low, of course, is 449, 450-ish. So if you squeamish, you can do something like a 460, 440 put spread. But I like UNH here. I have a couple of put spread on ELV. Where did I sell it? I sold 455, 430. 450, 430. So I had 2 put spread down here. If there is further weakness into ELV, then I probably add to it, maybe doing like another 450, 430 put spread. But yeah, 443-ish, 440, the 52-week low. That's a good area of support. So worst case scenario, if the market tank and ELV go down 5%, yeah, it can happen, okay? It's absolutely can happen between now and next week when the CPI data come out. We can see major weaknesses in the market should the CPI is hot. So be very careful when I'm selling puts or put spread this week and next week. You bet it's going to be 3 to 5% below the current prices because we can see a 3 or 5% move down should the CPI is hot and the Fed hike 50 basis point. So stay out of things like TLT as far as trying to add. Warren Buffett come out with news that he bought some. I trim some on this pop up here. Okay, you're talking major resistance now. Okay, you have the gap fill. Look, there's a gap fill right here at 62.46. So right now in pre-market, it is at the gap fill. It is also have a 50 MA at 62.85. So be careful. Okay, if you long, which I was, I trimmed some yesterday, the day before, yesterday. I can't remember, but I did trim before today. But I trimmed some more in pre-market just before I launched the chat. Um, I am at the lightest position in Oxy. At one point up here, I had as much as 700 share. I'm down to 125 share. So yes, uh, it been a good move to accumulate a lot of Oxy here in this range in the low 60s, and then sold most of it up here. I got some of the share assigned to me on this move down here, and I'll gladly buy those shares. Now I got out with a profit. USO oil, same thing here. Okay, when USO was over 70 last Friday and yesterday, I was like, nah, it's a sell. Okay, anything above 70 or at 70 is a sell on USO. Uh, Anything below 66 is a buy or sell puts in the 64 and below range, right? So for me right now, nothing to do with USO, nothing to do with oil. LNG, which I got out completely on this big pop, it run even more, but the weakness in gas is to do nothing right here on LNG. Okay, it adds support, but I wait for it to come down here into the 150 range. Okay, so for me, if I see below 150, 149, I will buy back what I sold up here I saw on this big pop here. 161, yeah, that was a must sell. And then for a few days, I looked smart, and then it reversed on this big FOMO here, and bang. If you bought here, oh boy. All right, before I go, let's run through the staple real quick. Pepsi. I have some, no need to add. It's at no man's land right now, so no need to do anything. Would I trim if I see a pop to the 177, 170? Yeah, up here. See that? It struggled up here last time. So if it get up there for whatever reason, sell. If it get down to 168, 169, add. Okay, that's what I'm doing. So I have a small position. I add down here, get out up here. That's simple. Coca-Cola, I bought a lot. Well, not a lot. All the Coca-Cola I bought was below in the 59 down to the 58-ish level. Every time it dipped, I bought some. If I see 60, if I see 60.8 or 61, I'm selling. Okay, so for me right now, if I see below 59, I will add. If I see 61, I'm out. Tight trading range. CMG, this look promising for me to sell puts below, but then the market reverse. Nothing to do here on CMG. Okay, if you long, for sure look to take profit before it reverses on you. Okay, 20 MA would be a good spot to trim or get out. For me, it's a no touch. CMG. Oh no, that's CMG. How about McDonald's? McDonald's is stronger, but look, it's at a downtrend here. See, reject, reject, reject. All right, so I don't see a reason for McDonald's to do much here, but it's gonna struggle. It might go sideways for a while. Okay, so there's nothing to do here with McDonald's. It's a staples. It will do well, but it is also expensive in fundamental. Let's close with one last one. What sector have I not touched? I touch on most of everything. Can't think of anything right now, but let's take a look at Martin Marietta. it's in no man's land as far as risk reward. For me, if there's a wick down here below 350, then it might be worth going long, but it has to be 350 and below to go long. Okay, if you have it, make sure you plan to exit 373 and above. Okay, this area between 370 and 380, forget about this day. This is a 1 day event, but going back 8 months, you have seen that it peak out at the 371, 372 many times. So if you long and you see 371 and higher, trim, get out, set your stop. Okay, it's not much room there to do much of anything after that. And that's it for this Wednesday live stream. Good luck trading. See you